Another video. Sorry I'm a little late. So I want to go straight into it, you guys. We're going to be talking about Bitcoin and the US dollar, where price is going to be going in the near future, and where price is exactly trending and what the momentum of the market is. So I'm going to be doing some specific things on how price is going to be showing you guys the market momentum and where we're going to be predicting where price is going to be going in the near future. So as you guys can see that we saw a huge spike. We're going to start with Bitcoin first. So I just want to make sure everybody's here. If you guys have any comments, please feel free to put on in the comment section over here and make sure everything is set going. So moving forward, okay, so what we want to see for price right now, you guys, is that we can see that there's been a lot of consolidation. A lot of consolidation has been at the 4-hour chart with more momentum to the downside. So as we can see, price has been showing lower lows and lower highs. So price has been definitely on an angular support and resistance. So if we put into consideration, as we can see, the MACD and the RSI are showing momentum to the downside. We're going to also pull up the EMAs as well. So the EMAs are going to show us a understanding of where price is going to be for the next couple of days if we look at it from the 4-hour chart. So I'm going to use the there we go. 1, 2. So it looks like we already have the 240 EMA, but I'm trying to get the 200 EMA. Give me 1 second. Oh, it's not letting me do that. Sorry. Oh, there it is. So now we have these moving averages to be indicators of where price is going to be for the next couple of days. So as we can see that the market has already been trending to the downside. We can already see the RSI, if we look at that template already, has been showing a lot of downside momentum. So I'm going to show you guys a little price prediction on where mostly price is going to be going in the near future as of right now. So let me just hold that up first. And here we go. So as you can see, there's been a mid cross section. So this mid cross section, the MACD essentially has areas where it's going to show you short positions. So right here, we can see that the market has been shorting it, or is shorting right now. Price is definitely breaking this area. If you guys don't know about the lunar cycles, the market does work on these lunar cycles with the moon. So I take it specifically my trading strategy. I do take this into consideration. The reason being is that a lot of this has to do with a lot of momentum in electromagnetic fields and how people's psychological perceptions of market material takes place. So that being said, everything has to do with transgression and transition periods as well. So when we're trading in the markets, we like to see price be moving in a certain direction for the upside and the downside. So let me just remove this. Okay, cool. All right. So as you can see, that market price is already showing these higher highs and higher lows. Price has already been showing this high formation to the down, or this formation to the downside. So price is considerably showing market momentum from this area where price was first at this consolidation area, and then it trapped those buyers by having this huge open position to the upside. Because as you guys know, that at one point this was a upside candle. This candle was showing you guys the market was going to the upside. So previously, market is showing you guys that there is at one time the market was having a high momentum. After that happened, price obviously went to the downside, consolidated price, and then pushed market price to another area. So what we want to see now is that we look for the price range. So as we can see, the price range has been showing the day as of this market push to around the area where we're at right now, which has considerably been around a 14-day market consolidation. So this 14-day market consolidation, we can take into consideration that price is going to definitely have to break out of this area soon. And what we want to see is that price could possibly, since there is a lot more momentum to the downside, as we saw that this spike to the downside, it got a lot of the stops and pushed a lot of the traders out the market. Right here, see, we got hit, our stop was hit on this trade as well as this is showing an engulf or spinning tops. So what we like to see is a spinning top and then the railroad candles. So we want to see probably a buy position and retest these previous highs, which we could see a market spike to 33,750 up towards 4,000. We're still going with the same analysis that we did last week, as we already saw market price already hit that area, especially on ETH as well. We had Ethereum had that breakout to the upside right here, where we had that market spike, or a lot of our take profits were hit, and then eventually price came back down, and then we hit another take profit here, and then now we're having a lower momentum. So if price does not want to get to the upside, we're definitely going to be going back towards the downside to retest these previous lows, so which is $84. $84 is specifically what we're probably going to be looking at in the near future if price does not want to reverse and test previous structures at 164 or 165. So what we want to see from here on out is that we want to see candle formations that have a defined market material and market structure. So as you can see previously, that price is definitely going to be showing either market momentum to the upside, which will completely short or have a lot of these traders that are short right now get out of the market. So here, they're trailing stops. Definitely their trailing stops are here as well. As we can see, there's wicks. The formations are here. And then we can see price move to the downside. So that being said, with this downside momentum or this market momentum showing a lot of downward momentum, we could possibly see a retest of the highs, but it's a possibility that market price could just be breaking out and move towards the downside and break this previous structure, which we have right here. And this would be a huge determining factor. And if this structure is broken or it breaks, then we will see a downward spike where price will then have a nice momentum to the downside and retest these lower levels, which will have some signals indications from there. I will be able to put my last market prediction on Ethereum on the Discord after this live stream as well. So if you guys have any questions on that, please feel free. I'm going to be able to do that. Hey, Edward, good to see you, man. Good to see you on the live stream. So if you guys have any questions on that, please feel free. I'm going to put this in the Discord just because we also see another formation that we'd like to see is an M formation. So price moved up right here, consolidated, then it moved down, and then we see that second leg of that moving average crossover, right, just right here, that moving average crossover. Then we saw 3 bullish candles, and this is on the 4-hour chart, you guys, so there's a lot more confirmation here. So what we want to see with price now that this is going to the downside, it's going to keep on consistently going down, consolidating price and moving from those lowers, and might retest this 80 to 80 flat to $85 range. And hopefully if price doesn't break this area, as we can see that there is still a little bit of confirmation here, price could do a reversal to the upside and retest these previous structures. But as we can see that it probably won't break 5,500 or excuse me, 5,500, $155. So right now we're still going with the trend right now. So if you look at the daily chart, we can still see the price is still bearish right now, and we're definitely going to be looking to go downside. But if there is that, we're taking into both measurements. So we want to have a trade for the upside, we want to have a trade for the downside. So we want to still have 2 high probability setups that will maximize all of the profits over time, the things that were the right. So we have the shift bar here. This is a huge shift bar. So if we do see another shift bar, it's going to have to be somewhat of the same, which another bar is going to have to be big to the top. This is obviously just inducing those buyers to go long, those breakout traders or scalpers. So a lot of them will just definitely get caught in this mix up, and then they're probably going to trap the sellers or the buyers for a little while before moving price to the downside if the price decides to go up. So we have 2 hypotheses on how market price is going to go based off liquidity setups and way market price and the shifting in zones and shifting in market liquidity. We want to be able to take in consideration 2 aspects in 2 ways and 2 dynamic forces that will be able to, you have to be very compatible, right? And having that, having that time and have that fluctuation, right, can make us a better trader because we're not so vividly structured on one trading method, right, or one trading setup, right? Because we want to be able to be malleable in every situation, especially when you're trading scalping or swing trading or day trading. You want to be able to define where market price could possibly go if your setup doesn't go the right way at first, right? So, and also it's about sometimes you're a little too early to the party when you're doing your setups. Like for me, earlier, I knew the market was going to spike to the downside, but I thought the market was going to spike up before it spiked down. So as we can see, that price already spiked down. This was on Saturday going into that lunar spike. So if you guys don't understand, so we had a full moon today, tomorrow, or yesterday and today, which is the lunar cycle eclipse. So a lot of these market spikes and market breakouts happen during these cycles of time, right? These synchronistic aspects of the market. So what we see here is that we can even go back to excuse me, guys. I can't speak today. January 7th was the last, was the new moon, right? So the new moon happened on January 7th. Obviously, that was a day where market price then reversed. So they were actually on the upside for the most, and then we had that new moon, right? I'm going to just do NW for new moon. You get that new moon, right? And then we have the new moon, and then we had the reversal, right? So the reversal happened to the downside, and then for the next, 14 days, the lunar cycle, there's 14 days in that lunar cycle, we had a market push to the downside. And then now we have the new moon, so we possibly could see another 14 days of market price going to the upside to retest these highs, or we could see price go to the downside to continue with the bearish trend to test these previous structure lows, which is at $80 as well. So hopefully this is both. So morning, it's just the patterns. BTC patterns of 4 hour looks so manipulated from the left to the right, and it's just a continuation of the same patterns over and over. Exactly, Justin, you're so right. So yeah, it's exactly the same thing a lot of the times. The market price will then go. So as you guys know, there's 28 days, or usually there's 28 days in the market cycles, right? So then there's 14 segments. So I call this the intervals of 14 segments. So 14 days, usually the market moves into one direction, and the next 14 days, the market moves into another section. So as we can see that this 14 days was obviously the first trend of the downside. So we possibly could see the same momentum pattern to reverse price for the next 14 days, or we could see price for the next 14 days go to the downside and break these lows and see price test these structures. So I'm going to do actually a healthier, more dynamic structure and market prediction. As you guys can see, I do that a lot in the Discord. I put a lot of those market predictions and market analysts and I actually type in as well the things that I possibly might see. So I'm going to go into direction with that. So to even out what I was saying earlier, or to reiterate what I was saying earlier, I really believe price is going to go either reverse, or it's going to have a continuation of the structure trend right now, where price is going to be breaking out of this level for Bitcoin and for Ethereum. So this area, which I'm talking about, is 116 to around 100 flat. If it breaks that area and it keeps on showing momentum to that side, as you can see, you guys, the MACD and the RSI. So if you put on the RSI, which I like to use more so than the MACD, if we put on the RSI, we can already see that the momentum is still showing downwards, right? So we can see the downwards momentum. We can see that the MACD is already showing low volume, so we can possibly see that downwards to have that retest that bottom. So if we do see that, we possibly are going to see different things. So, hey, do you think it's more possible that ETH will go down from here? Yes. Definitely see Bitcoin having more momentum to the downside than more to the upside. So that's why I want to have two dynamic specifications on where price could possibly be going. So I definitely believe that price to the downside is more high probable than it is to the upside, just because we had that just seeing market price for a very long time, you guys. I know that price definitely has certain areas where I'm just going to remove the indicators real fast for you guys. So I can see that price is already showing these lower lows. So this possibly could be a W formation. So I'm going to, like I said, I'm going to have this on the Discord for you guys. I'm going to do this after I get back from my next meeting. So I'll have that available for before the end of the day. You'll have that, and I'll also be doing a market health update, so you guys be able to check that out as well. But we can see that this symmetrical pennant right here broke out a price, shifting price zone, then to the downside, then dropping liquidity, having that shift of price one more time just to induce those buyers one more time, then shorting them off at one at a time, selling a lot of these traders, and then once again having those sell stops being hit. So if we do, obviously we see that hammer candle, or if you guys want to call this I call it the hammer candle, which we can see that's a evening star, or a formation I like to call it evening star, but this is the 3 candle formation we like to call it evening stars. So if we see this evening star, but if we see that candle afterwards have that spinning top, which is a indecision candle. So if you guys know about Japanese candle formations, you guys know that the evening star is usually the formation of star, or formation before a reversal to the opposite market. So as we see that we had the full moon, right? The full moon. We had the full moon on yesterday, today. Well, yeah, yesterday, today. We have the full moon, right? Cycle. So, like we said previously, we had the new moon right here, and then it reversed price, right? New moon on January 7th, and then we had the reversal, and then we possibly could have another reversal, having it be the 21st to the 22nd. Price could then reverse to the upside. As we can already see, this is the evening star. We see a spinning stop continuation. But the one thing that we want to take into consideration is momentum. price is still is at right now a huge support level. As we can see that this was the previous support level for, you know, what, since December of 2018, so that last month, right? So we have this support level, and we're testing those lows at this level right now. So the fact that we're hitting this level, and this is a key form of support, and obviously I'm going to write 2 because we can't really specify a trend based off one area of support. We're going to have to do a zone. That's what I do, you guys. I don't focus my trends or my support resistance levels on one specific aspect. I look for zones. Zones are giving me a higher optimistic aspect. So if market price breaks out of that, it could be a false breakout. So I still have that that area of like, okay, this possibly is not going to break out. It's just testing that zone, right? And we see in the Fibonacci's and a lot of other trading elements that price can go really down, right? We'll see like for instance, like price right here was completely bullish, right, to a point where a lot of people thought it was just going to shoot up even higher, and then we saw that 4-hour candle closed as an indecision spinning top, and then we had that reversal. So what happens? Why does this happen? Because they're trapping people, right? It's a trap. They're trapping buyers at this time. So a buy position, they're trapping you, and they're making you induced to believe that price is going up higher, because at one point, you guys, this was a full candle. This was a full bullish candle, and people were buying. And then at the end of that 4-hour candle, they retraced. They have a bunch of trapped buy orders right here. So what do? They hit their stop losses. And then after they hit their stop losses, then they continue with trend after they have already took out a lot of those buyers out of the market, right? That's what market manipulation is. That's how the market moves. They want to give you enough money to keep the game going, but not enough to be prosperities or have prosperity and abundance, right? You have to put in all the other faculties in the market and structure and have dynamic decisions on how things are going to be working as well. So, So Michael, hey, how's it going, Michael? Good to see you, brother. So Justin, if ETH breaks the psychological barrier of 100, we will dump in the double bottom. Yes, definitely. So $80, yeah, definitely, Justin. You're right on spot. Yeah, so $80. So bottom market makers control the market. People react to FOMO. Yeah, exactly. Fear of missing out. Exactly. So you guys are very, very we're on the same wavelength when it comes to this stuff now. Awesome. Yeah, exactly. So that's why I give 2 hypotheses on where market price could possibly be going, because I don't want to give you guys something that obviously is not integrity with what I believe, and secondly, like you have to be very malleable. You can't have just one prediction and so focus on that one prediction, because if it goes against you, you don't want to be in a losing trade, right? So the biggest thing about trading is that to be a profitable trader, or to stay profitable in trading, is that you're not trying to hit home runs. You're just trying to get base hits. You're trying to make money over time. But then your trades you lose are very little. So it doesn't have that pack. That's why we look for risk rewards of 2-to-1, 3-to-1, 5-to-1, because if we are consistently making 3-to-1 trades, 5-to-1 trades, and winning those over time, occasionally we'll have those stop loss hits, but they'll be very low risk, right? That's why the thing about trading is that you need risk management. Risk management is one of the biggest things. So you're not always trying to hit home runs all the time and having huge exposure of your account, because I've done that, you guys, before. I've taken a $60,000 account and did huge leverage on it, and it was just like, no, like that's not good, because you're not, eventually you will lose a lot of money. Like it will lose a lot of money, and you're not going to consistently be able to live off the money you make from the market. You're going to have to get back to the grind. So what we're trying to do at Traders Profit Club is give you guys the structure and the format, or the blueprint I should say, that will give you an understanding of price, that will give you a longer or a better aspect of trading and being able to consistently, stay profitable in trading. So that being said, you guys, so this is my analysis on ATH. As you can see, Bitcoin's the same thing. If we do see that breakout, as we can see, we have a pending order right here. Just if in case price does break this area, we're going to go long to retest 4,000. But right now, as we can see, that price is showing a lot of downwards momentum. As we can see, the downwards momentum is showing consolidation. We have an angular support right here. So price is definitely showing a downwards thing. So thanks, Michael. I really appreciate it. So yeah, so just to let you guys know that a lot of things that are going right now in the market are going to be showing a lot of momentum for the downside or the upside. So we're going to see a paradigm shift or a transition in market material or market aspects from February to March. February, March are the biggest breakouts or the biggest trading months out of the year. It's when all the proprietary investors are back from their holidays, spending all their bonuses, you know, and they need to make more money. So a lot of people are trading. The market has been reset, you guys, for the whole year. So the algorithm the market is set on has been now reset for that full year. So they have a whole nother range that they can do. So as you guys can see that we had a huge market spike 2 weeks previously in the forex market. So now that we have that available, price is definitely going to have a lot more momentum to the upside or downside. So we're going to definitely be seeing some huge trades, right? Because of this momentum and this flow of liquidity, we want to be on the upside of price. So this is just seeing pattern recognition for so long, you guys. I can already see what price is probably going to do, and I want to just give you guys this analysis right now. Is that price is probably going to retest this 3700 or 3750 retest, and then it's going to have a shoot to the downside. Like price is just going to break this area. It's going to break previous structure, break 3500 as we're in that zone right now. So we're in that zone right now between 3500 to 3300. So we're going to probably break this shifted zone. We can see a little ABC pattern going right here. Possibly if you guys use those ABC patterns. I just specifically see like right A, B, right C, you know, and D, and then I see a breakout of trend to the downside. Or we can see D up here, you know, more so at previous. If you guys use harmonics, this looks like a bat formation, right? If you or a Gartley formation, if you guys use these Gartley or bat formations in harmonics, I don't need to like use the whole entire like draw out of it. I don't need to do like 161.8 retracement to the 38.2 with the extension of one. Like I don't need to do that anymore because of the repetitive methods that I've been able to do over and over again. I already can see a Gartley pattern or a bat formation without actually mapping it out. I don't really need to do that, but just for your guys' sake, I want to make sure that you guys understand that this is a huge area where price is definitely showing that ABC pattern, or you can see that Gartley pattern or bat. But if you guys want me to do a harmonic draw out for you guys, just put in the comments, press yes, and I'll do it later on for you guys, and I'll put that into the Discord, so you'll have that. I don't really do a lot of Gartleys and stuff like that, but a lot of it's that way. So no home run on bats. Go base to base, then home. Exactly. Down late. What's up, everybody? How's it going, Coach 37? Good to see you. Another lower high, just a continuation of the left-hand side of the chart. Eventually, descending triangle will break. Yeah, Justin, you're doing your homework, man. I like it. I like it. You're doing your homework. I really like that. You're definitely doing a lot of the market. So yeah, I'll do. Okay, so I see some yeses. So yeah, I'll do a harmonic pattern on later, and then I'll put that in the Discord for you guys. So I'll show you guys exactly what I mean. So what I mean is that actually I can show you guys right now. So I'm not really good at drawing them out, so I'm just bear with me, guys. So we're gonna take this to swing low to the swing high, right? So as you can see, this price is definitely from this swing low to this swing high. We can see prices retrace to the 23.6 and the 76.8, right? So then we're gonna go from that swing low previously, from that low to that high, and then we're going to do a price prediction. Whoops, did it wrong. I gotta get better at that. I haven't used harmonics and in a while, just because I've been using basic fundamental analysis and structures. But I'll give you guys that setup in the Discord after my meeting. I'll go back and I'll break it down for you guys, so you'll have that available. So bear with me on that. So basically what I see is that price shift area. So if we're going to talk from a fundamental aspect where it's not like based on so many technical analysts, price broke out of this structure and made a zone hop, right? Zone shift to the downside, stopping out the traders that were previously long here, right? So then they consolidate price for a long period of time, consolidate price, and then there you go. Shift the zone to the downside, stopping out all the buyers that were built in this area right here. After they do that, they're going to do the same thing. They're going to shift the zone, work off this angular support, make that D formation, right? They might even break price even higher. That's why we do A, B, C, and then D. D is going to be that formation to the upside to induce. And sorry for the mess, you guys. So they're going to induce buyers, right? So they're going to induce buyers long before the market breakout to the downside, just how they did here. So as you guys can see that they did the same thing, like you said, Justin, that they're going to do again. So they go long, right? They huge spike to the upside. They make that A formation, and then they consolidate price, right? A consolidating range between 3,500 to 4,000, right? That $500 interval, that 500 pip interval. I want to show you guys that because you guys are going to love that afterwards. I'm going to show you that the market works between 250 pip to 500 pips. So as we're talking about pips, we're talking about dollars here in the crypto market. So they work in $500 intervals and $250 to $500 intervals. And I'll show you guys a document on that. I'm actually going to put that in the Discord as well, so you guys will have that available. And I'll show you guys, because the market is based on an algorithm, and this algorithm has a sense of psychological determining factors of where it will go based on price prediction or price awareness, right? So a lot of these times, this is why the market will reverse and retest at these previous structures or previous highs and lows. So before I answer one more your guys' comments, I just want to give you guys an analysis on what I believe is going to happen. So as you can see that this was a shift to the downside. They shift price down to the downside. So let me just remove this drawings because it looks pretty ugly. So market shift from the upside to the downside. All right. First stop loss hit, right? First SL hit for a lot of these buyers. Then they do the same thing here. They consolidate price in this flag area where then they open the spread. They close a lot of these pending orders right here. And then they shift the price that everybody was long right here. Then they stop you out again. Second stop loss hit, okay? Then what they're going to do is the same thing. They're going to consolidate price. Either they're going to break low to just have that third level or that third run really straightforward and just boom. Because as you guys can see that this is called railroad tracks. So if you guys are understanding of railroad tracks are usually what happens at the top or the bottom of trend. So we can look at price, and essentially is when both two candles, usually at the 4-hour chart, are basically equilibrium, or they're basically the same, right? They are the same in length, same in width. That's called railroad tracks. These are usually happening between the top or the bottom of trend. Okay, so as you can see, that price was either going to show market momentum, as we can see previously, market could possibly go to the upside. This could be that D pattern, right? So we have that A, B, this is a B, that C pattern, and then we could have that D coming to the upside here possibly, or we could have it in any of the zone area in general. So that's why I say it's got to be a zone. It's not going to be just a specific area. So in between this area in general, price, if it goes into this area, look to go short. We're not going long. We're still short. We're just trying to catch it at the highest, because I told you guys, to be trading, to make a lot of money, you have to catch it at the highest and the lowest and have low drawdowns to stay and to have profitability, right? So we're trying to catch it at the highest and the lowest. So we want to see price either test this area, consolidate price before we see that market move to the downside. So hopefully that hears. Definitely, man. Thanks. I appreciate it. Are you using extension and retracement? So the extension, Michaels, and the retracements, I'm going to use both. So for harmonics, you use extensions and retracements. Like I said, you guys, I'm going to give that, I'm going to put that in the Discord, because I'm going to actually have to refresh on my harmonic stuff, because I haven't used harmonics in a while, but when I see a harmonic setup, like, I know what it looks like. Like, I've seen it so many times that I'm like, okay, yeah, that's definitely a Gartley, or that's definitely a bat, or I see that's definitely a shark pattern. Like, I can see these patterns like before, like I do the extension. So, but I want to be like, I want to have it refreshed, because I trade so many different ways and so many different styles that I have to take into consideration that, okay, I need to have a refresher, right? So I'm being brilliantly honest with you guys that, like, the Gartley and the shark pattern, stuff like that, I'm not the best at just mapping them out really quickly and knowing exactly where it is, but I know when I see one. So that's why I just wanted to let you guys know that I'm seeing that formation set up right now, and I'm going to go back and I'm going to actually do it for you guys and do the Fibonacci extensions and retracement for you on that. But as you guys know, me, I use psychological aspect methods. I look for I trade like a proprietary trader, so I'm like looking where the stop losses hit, where price is definitely not going to go, and where it's possibly not even going to look to go. That's where I usually trade my styles at. So hopefully that answers your questions with the market analysis on that part. So if we put into the moving averages, so we can put in EMA, so we can put in 2 EMAs. Dang, it's always doing that right now. So let me just do this. So we have one EMA showing price consolidation, could definitely be showing. So we're just going to put a 200 moving average right here so I can show you guys exactly. So as you guys can see, price is definitely showing short, right? So as we know previously, if the market is below the 200 moving average, it's just short. And if the market's above 200 moving average, it's a long, right? So now we're going to use the same aspect as we do all the time just to give it a consideration of where price could possibly be going. So if we see an area that moves to this upside momentum, what are we going to call this, guys? It's called a market stop hunt. A market stop hunt is basically when price is consolidating and trying to induce those buyers to go long for a short amount of period, just like here, before they trap them. And after they do trap those buyers or sellers, then they will then reverse price to stop all those traders out, and then continuing with that trend and breaking and making profit, right? So this is what we're probably going to see with market price in the near future, where we're going to see that market stop hunt to the upside, consolidation of price between that 39 to 4,000 range. If price decides to go up higher, guys, remember we have to take into consideration the market could just break out, where it could just have that zone shift right here and literally just take all that profit out right now. So this is where our 2 methods are coming into play. That's why we want to still have 2 compatible systems that work for our better good and for us to stay profitable. So hopefully that understands. So which indicators do you prefer to use in crypto? So I use the 200 I use the same indicators on all market futures, commodities, options, all of them. I use the 200 moving average. I use the 50 moving average. Those are the 2 ones that I mostly focus on. If you want to use a different one, you can use MACD because it shows a momentum indicator where it can show you where price is going to be going, or can show a lot of reason or a lot of ways where price can be going. And then I use also, you can use RSI. If that is possibly something you guys use. It's something that I use sparingly because I don't like to have too many indicators, because I don't want to be confused, because an RSI could be showing one thing, but a MACD could be showing another thing, or a moving average could be showing one thing, and then you have your RSI. So you don't want to confuse yourself. You want to have a very easy methodology that you can focus and make profit on. You don't want to have something that's super just hard to listen or hard to see charts. So hopefully that answers your question on what crypto or what indicators I use on crypto. So same as I do on forex, you guys, same as I do on every other price charts or markets as well. So as you can see that we can do, so I have to mess this up. So we'll go to 50 moving average. So we can see price having that area. So we want to have this area show so we have that 200. So we have the 200 moving average, 50 moving average, and then we can put the 30 moving average as. So if you want to know another indicator that I use for scalping, so scalping, I do use a 30 moving average indicator sometimes, because the 30 moving average is a huge indicator where price can have a good close or a good entry for a scalp. So a scalp meaning, like, as you guys can see, this is the 30 moving average, and I'll show you exactly what I mean before I move more. So as you guys can see, when price is moving into a momentum, and I only use this on a momentum method, so I'll show you guys exactly what I mean now. So you can see that this area is basically, I have 2 areas to enter the trade. I use the 50 and the 30 moving average to show you the entry levels. So the 30 moving average is essentially one area where I'm going to show you guys, and then the 50 moving average is another one. So 50 moving average, whoops. So first off, you're going with trend on this strategy. So going with trend, right? Secondly, you have the 50 moving average. I use the 50 EMA and then the 30 EMA. So this 30 EMA I use, and as well as the 50 EMA are my entry points. Oops. Entry point, okay? So I use this going with trend first, and then having this, and this is my scalping strategy, okay, you guys? So what I like to see first is that when price comes from a low to a high, making that swing low or that swing high, right? we know that price is probably going to continue with that trend. So it's about finding those entries. And we're talking about scalping, you guys. So we're talking about very short time frames. So would you put a sell order at 3,400 in case market breakout? Yes, that is definitely a good idea. So in case market breakout, so let me just, before I move forward on that, would I put a start? So 3,400, yes, that would be a very good idea, Michael. Definitely a good idea to put a short breakout for in case market might just break to the downside. So you have both trading setups. You have a trading setup if market price goes to the market stop hunt, and you also have a market price if market, or you have a market pending order if market decides just to break out of that area. So yes, that's definitely a good idea, and that's really, really smart of you to think of that. So what I mean by this, what I mean by scalping is that I use a 30 moving average is because 30 moving average is showing you that it is going to be an area where there's a resistance and support. So as you can see that there's resistance here, so you'll know where to buy and sell because we have those spinning tops. You want to look for spinning tops, engulfing candles, railroad tracks, and you want to see it be at the high or the low of the day, right? The high or low of that trend, right? So as we can see that this is the high, we see that first, that spinning top, it's a short, right? And then we see that retest again to the 30 moving average. So this is why I use the 30 moving average sometimes, you guys, for my scalping, especially if I'm doing like higher leverage scalping, right? So what I mean by higher leverage scalping is that I'm doing like standard lots, or I'm doing like higher standard lots on my forex account. So I'm like watching it like a hawk right now, and that'll be like my entry. I have to look for setups specifically before I enter those trades and going into those messages. So I mean, that's my analysis, you guys, for today for Bitcoin. What I think market price is going to do. I'm going to have this on the Discord for you guys by the end of the day as well. I have a meeting, but after that meeting, I will be able to get all this for you guys. So, right, we're going to definitely look for that stop hunt. If we don't see that stop hunt, like Michael said, it's a really good idea just to have that price prediction, that market pending order for that short in case that short just breaks to the downside. And we also have a market pending order right here. First, we have one for the upside because we want to scalp that, and then we have another one for the downside in case market price breaks and keeps on continuing. So that's my market analysis, you guys, for the BTC. And as we can see, that market is definitely looking the same thing for Ethereum. We can see either market price make that stop hunt to the upside, or we can see prices break out and move to that $80 range, which is specifically going to be that double bottom area. So as we can see, this is that previous bottom. So this could probably be that bottom as well. So we're going to be looking for the short, but we're looking to catch it at the best area to catch it, so we can make that high profitable setups. Okay, so that's my analysis for the crypto as of right now, you guys. And I'll have that in the Discord. Before I finish up on this live stream, I want to show you guys what I believe the USD JPY is going to be doing. So as we can see that I talked about those 250 pip intervals. So I'm going to show you guys something that's really crazy right now. So as you can see from this high, if we were to break down price from that high to low, you can see that market price is exactly 500 pips. So if you guys saw in the Discord, I put this on the Discord. So what I believe is that price has first. So as you guys can see, we're still below the 200 moving average, right? So we had that breaking crossover from that bullish market consolidation, right? So we were long beforehand, right? Previously. And then we had that moving average crossover, which is right here between the 250 moving average. So now we're looking for short positions. All this is a swing high, you guys. It's nothing but just a swing high. They had those manipulation of price. They stopped out a lot of these traders that were still in this area, or got into their orders, their pending orders, right? And then drove price up, hitting all their stop losses, right? Inducing those buyers for a short amount of time, but we're still below the 200 moving average. So what do we want to do now, you guys? We see already, what does this look like, you guys? A triangle. Reason being is that we're going to have a consolidation, false breakout to the upside, and then we're going to have a continuation to the downside, because that is where price will then continue to fall. And now we have 500 pips to work on, 500 pips to work with, exactly. So we're probably going to see a first 250 pips hit. So our first entry, right, this is going to be more of a swings trading strategy, guys, is that we're going to probably see the first 250 pips hit first, or obviously it's going to be hit first. So we're going to see 250 pips probably hit, and that, what level is that, you guys? So we're going to probably see at 107, right? 107 is the area that we're probably going to see our first take profit. And then if we see that area showing more momentum, we're going to put another take profit at 500 pips. So this is this is the strategy I'm going to be showing you guys in the near future. 500 pip intervals or $500 intervals between the markets and how they play on these market statistics and market factors to make a lot of people money and to lose a lot of people's money. So that's my market awareness for today, you guys. Hope you guys enjoyed today's live stream. If you guys did, you can say I or say yes. And hopefully you guys are learning a lot, and I can see a lot of you guys are already dissecting and learning a lot. I mean, I can see Justin literally knows everything I know, and Michael too. You guys are already like completely like gathering and absorbing all the information. So it just feels so awesome that you guys are getting it so easily. So hopefully in the near future, you guys can see that, you know, a lot of this is going to pay off for you guys. A lot of this market awareness and market statistics are going to pay off. So we're definitely going to be seeing some huge stuff and moving forward. So to answer your question, sorry I didn't answer your question, 23 Kirk. The time frames that I use to scalp are my 15-minute time frames. So I focus on the 15-minute time frames on my scalping to get into the markets on trading, and I look at the 15 minutes to the 30 minutes for the market. So yes. So awesome, you guys. Thank you so much for being on today's live stream, you guys. I know this is going to be a really killer week for a lot of us. I'm going to actually have a meeting, so I'll be back in the Discord around 3:30 latest, and then I'll be answering all your guys' questions, and I'll do the harmonics markup. And yes, Michael, we're all still learning, man. Like I said, after I get back to the meeting, I'm actually going to go back into my harmonics book. Actually, I have a book that I'll show you guys. I constantly am researching and reading every single day. Like, this is not, I don't believe I know everything. I'm just a learner just like you guys. I'm a sponge. Like, everything is just learning over and over and over and over again. Edward, thank you so much. I really appreciate you being on here. And I'm just like learning just as much as you guys. I want to be the best trader ever in my eyes, and I want to be able to obviously, know where price is going to happen before it happens, and to have it have the fluidity so dynamic in my subconsciousness that I'm able to trade super easy. So thank you guys so much for being on here, and I really appreciate it. You guys have did so well, and guys are doing so well, and hopefully you guys are making some profits with our signals. And Naeem's been killing it with those crypto trades, and he's been obviously sensational with crypto long before I even met him. So he's gonna just keep on thriving and being a successful trader. He is as well. So I really appreciate you guys being on today's live stream. I will be available around after 3:30 on the Discord. And I hope you guys have a blessed day, and I'll see you tomorrow. And have a good one. Bye.